Wall Street closes mixed ahead of the Fed rate decision. The Nasdaq and S&P 500 close at record levels, while the Dow Jones closes lower. A status quo policy is expected from the Fed, while the market will be watching for commentary on the rate cut timeline. Asian markets trade mixed. China CPI inflation for May rises 0.3% versus expectations of a 0.4% rise, while producer prices dip at a slower pace. The GIFT Nifty suggesting a flat start for the Indian market. Brent crude hovers around $82 a barrel as prices recover from last week's losses. Gold edges higher to trade around $2,330 an ounce. And important macro numbers due today. A CNBC TV18 poll sees CPI for May coming in at 4.9% sequentially as food inflation remains sticky. Industrial production for the month of April is seen at 4.7% versus 4.9% seen in March. BJP's four-time MLA Mohan Maji will take oath as the new Odisha Chief Minister today after the party brings an end to Naveen Patnaik's 24-year rule in the state. The TDP's Chandrababu Naidu will also take oath as Andhra Pradesh Chief Minister for the fourth time tomorrow. The funding roadmap to his dream project of building the state capital at Amravati, however, remains unclear. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those were the top headlines. A lot of cues, be it macro and micro as well. We'll be discussing that in greater detail. But first up, as always, let's take a look at the Asian markets. Now, we got the Chinese inflation number, which has come in slightly lower than what the street was working with, 0.3% versus an expectation of 0.4%. We do have a lot of cues coming in from the US as well. The big Fed decision awaited today, ahead of which the Asian markets are largely mixed right now. So the Hang Seng, which is lower, continues to be lower for second day in a row. Taiwanese index is doing well. That one is up around 135 points. We have the other indices as well. Nikkei is lower, Shanghai is lower, but Kospi is doing well and so is the Straits Time. But let's look at the GIFT Nifty because that will indicate the moves for our own market. Absolutely flat, but with some negative bias. So we'll have to see which way things go for our own markets. Let's move on now and talk about the US markets. Wall Street ended mixed on Tuesday. The S&P 500 gained over 0.2% and the tech-heavy Nasdaq added 0.88%. Both the indices hit fresh all-time highs during the day, while the Dow Jones lost over 120 points. The US Treasury yield slipped as the Federal Reserve began its two-day policy meeting yesterday. Apple surged over 7% and closed at a fresh record high at $207 a share after the company announced its artificial intelligence strategy at its Worldwide Developers Conference. Along with other updates, the company also announced the integration of its voice assistant Siri with OpenAI's ChatGPT. Shares of Oracle also jumped during the extended trading after the software maker announced cloud deals with Google and OpenAI, and despite the company's fourth quarter earnings, missed Wall Street expectations. Okay, as the Fed's two-day meeting is underway, CNBC's latest Fed survey shows that the US economy is gradually weakening. Steve Leesman joins us with the details.
CNBC Fed survey growing a bit more hawkish since the last meeting, whittling down the probabilities for rate cuts this year and extending how long the Fed is expected to be reducing its balance sheet. Here are the numbers: 46% probability for September, 62% for December. Both are down from the May survey. Both are a bit below market pricing as well. 5.01, that's the average year-end funds rate, that is up a few points. And March 2025, that's when the Fed's expected to end quantitative tightening. In the prior survey, it was January 2025. Peter Bookvar, Chief Investment Officer from Bleakley Financial Group, he writes in with the survey, nothing in the recent data we've seen should give Powell confidence that it's time to cut rates, and I don't think he's going to be influenced by other central bankers that have already cut. More on that in just a second. Okay, so here's the outlook for the funds rate. 5.4 is the current one, goes down to 5 end of this year, 4.1 next year still with the long run 3.3. So you can see the Fed expected to be above the neutral rate for quite some time. At the beginning of the year, the outlook for 2025 was about 50 basis points lower. Even while its outlook has turned more hawkish, the group of 29 strategists, economists, and fund managers has more concerns from the dovish side. Take a look here. What's the most likely scenario? The Fed cuts too late, say 66% of our respondents. 21% say it cuts too soon. That's the most likely scenario. And just 14% think the Fed gets it just right. Mike England, chief economist at Action Economics, he writes in, says, there are growing signs U.S. economic growth is beginning to weaken, perhaps as supply shortages across industries are finally dissipating, providing more two-sided risks to the economy. Still, respondents don't think the Fed should cut rates just because the real funds rate has gotten more restrictive with the fall in inflation. But they think the ECB did the right thing by cutting interest rates for just that reason. And of course, we have that CPI number tomorrow morning, which could actually influence the outcome of the meeting tomorrow.
Okay, let's also listen into some important opinion coming in from the market experts as the street awaits the Federal Reserve's decision.
Yeah, I just don't think what the other central banks are doing is going to be that much of a consideration at the table. Well, if you want to predict the path of policy, I think we kind of have to put ourselves into the head of Jay Powell and the committee. And they believe that monetary policy and high rates eventually will achieve the objective. There's been, I think, no abandonment of that conviction. And so I think they will continue to use the tool they have, which is the level of the interest rate, to try to slow the economy and bring inflation down.
I think the economy has surprised for 8 quarters now. We've had 8 quarters of, on average, above 2% growth. The last quarter was the first one below 2 after some extremely strong acceleration into the end of 2023. Most economic forecasters, including the Fed, but outside private sector as well, and the markets were forecasting recession and cuts all through 23, and they were just wrong. 525 basis points of rate hikes since March of 22. And really nothing's broke, and if anything, everything's accelerated, and inflation has come down. I think staying pat and staying a little more concerned about inflation for longer is the right storyline.
All right, that's the US market update and expert opinion. But moving on, the political uncertainty in France continued to weigh on European equities on Tuesday. The French CAC slipped over 1%. The German DAX was down over 120 points. The British FTSE closed with losses of about 81 points. The Pan-European Stock 600 index finished 0.9% lower, its biggest single-day drop in 2 weeks, while Italy and Spain's bank-heavy benchmarks also saw steep losses. Banks led the sell-off in the region, with the sectoral index sliding over 2%. The French 10-year touched a 7-month high and continued to remain in elevated levels. Okay, all right, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in with what the trade setup is looking like, the stocks that are likely to be in the news, and of course, action from the F&O space as well. Hey guys, a very good morning to all of you. Middle of the week, so Hormas, let me come to you first up. What is the market setup looking like today?
So the setup is looking as some bit of exhaustion coming in for the market at higher levels, and it's almost par for the course, right, considering the recovery that we saw, almost 2,000 points in just a week. So the Nifty is facing some exhaustion at higher levels. It fails to cross the mark of 24,000 now for 2 straight days in a row, and the fact is that it made a record high on Monday, 23,411. It fell almost 150 points from those levels. It tried to retest those levels yesterday, came close to 23,400, but failed to hold on to those levels as well. It closed at around 23,260. So some bit of exhaustion at around 23,400 and 23,300 as well remains the key level to track. Same is the case for the Nifty Bank as well. It's facing that resistance around the mark of 50,000, which it is failing to cross. Yesterday as well, it came close to around 49,960, but then it again reversed from those levels, ending close to around 49,700 levels as well. So the 2 indices are facing some and are in some bit of consolidation mode. The VIX continues to cool off, though fell another 10% yesterday, so that is a positive. Whereas in line with most market participants, what they were anticipating as well. Now, sectoral indices, they are continuing to recover some of the losses that they made last Tuesday. The realty index recovered all of those losses yesterday, climbing for the 5th day in a row. The PSU index that fell almost 16% last Tuesday has recovered almost half of those losses. The broader markets, the mid-cap index made a record high yesterday, so that's a positive, and both mid-cap and small-cap indices have recovered all of the losses they made last Tuesday. What you need to watch out for, of course, the weekly expiry of the Nifty Bank today, so that will remain in focus. Both CPI data comes out both in India and the US, and of course the big trigger is the Fed rate decision later tonight, which we'll react to tomorrow morning. So that are some of the key cues to watch out for today. The US markets, the S&P 500 and the Nasdaq ended at records. The Dow was slightly slow, tepid trade there, but the GIFT Nifty is also indicating a slightly muted start for our own markets as well.
Okay, all right. So 3.3 points lower is where the GIFT Nifty is at right now. Let's go across to Vamakshi. Some other stocks that will be on your radar today. Good morning.
Well, good morning, Sona. Let me first start off with HCL Tech. This counter will be on our radar because the company has signed a deal with Germany's largest cooperative bank. This deal is worth $278 million and it will be executed over the period of next 7.5 years. Tube Investments also on our radar. The company and its arm TI Clean Mobility have signed a definitive agreement with a couple of investors. This is for additional subscription of compulsory convertible preference shares of 160 crores in TI Clean Mobility. BL Kashyap has received summons from SEBI for production of documents before authorities. They've also received 2 new orders worth 1,021 crores from Satwa Homes and DLF City. TVS Supply Chain Solutions has won a 5-year strategic deal with Daimler Truck AG, and this solidifies the company as the primary logistics partner for Daimler Truck. Patanjali Foods has issued a clarification on a report which suggested that Patanjali's Ayurved non-food business will be merging with Patanjali Foods. Patanjali Foods said that the board discussed Patanjali Ayurved's proposal for sale of non-food business undertaking back in April, and the committee was formed and the work is still in progress, and they said that they will be informing the stock exchanges as soon as any development takes place. NHPC's board of JV and NHPTL, which is the National High Power Test Laboratories, has approved transfer of 1.31 crores of NHPC shares to Power Grid. Post this transaction, the equity holding of NHPC in the JV will fall down to 12.5% as compared to 20% earlier. Wipro has launched Lab 45 AI platform, which is designed to increase efficiencies and transform business functions. TCS has launched a new IoT engineering lab in Ohio. This is to accelerate innovation for clients. And lastly, let's also watch out for Dollar Industries. They've signed Mahesh Babu as the brand ambassador. They will be opening 50 exclusive brand outlets across South India, and they aim 50% sales growth in South India in FY25.
Okay, all right. Thank you so much for that list, Vamakshi. Let me go across to Mangalam. He's joining in with all the cues from the F&O space. Hey, Mangalam.
Good morning. So it was consolidation which was underway in all the frontline indices, whereas the broader markets continued to do well. And that's not particularly bad, largely because portfolios feel a lot better when a lot of stocks do a lot better as well. So the Nifty Bank was mildly lower, even as the Nifty closed a little above the flat line. If you look at the broader markets, you would see nearly 3 stocks advancing for every stock that was declining. And at the same time, we saw, strong outperformance that continued through yesterday's trading session. Importantly, the cash market flows. FI sold about 111 crores, DI has bought about 3,200 crores, but not much to infer from this, largely because these flows were impacted by the large trades that we've been speaking about all of yesterday as well, Interglobe, IRB and Honasa. So those were the reasons why, cash market flows were impacted. But importantly, in index futures, the FIs continue to buy. Yesterday as well, there was a near 1,000 crore purchase, adding 15,000 long contracts, covering another 2,700 short contracts. And now the long exposure has increased from 17% 5 sessions ago to 37%. And net shorts also have contracted to just about 1.25 lakh contracts. If you do a pre-contract changing value, then it would be close to around 65,000 contracts on the short side. Not particularly bad as well. The India VIX is lower, and that's telling you that maybe the market will continue to be in this range. And what is this range? 23,450 call, extremely active for a premium of 50 rupees, telling you 23,500 continues to be the upper limit for the market. At the lower level, 23,150 to 23,200 would be the support. That's where options are active. It is Wednesday today. That implies Nifty Bank weekly options expiry. What is the range? 50,000 call and 48,000 put. Both of them most active. Just keep an eye out on a couple of stocks. Hind Copper, yes. GMR Infra was a big mover yesterday, but GMR Airports, that is, but has entered F&O ban as the open interest has crossed past the market-wide position limit.
Okay, all right. This is the Power Prep segment, and those are the F&O cues. Thank you so much, guys, for joining us and telling us what to expect from the trading session today. Let's move on to some macro themes to watch out for today. India's CPI data for the month of May and IIP data that tracks industrial growth of the country for April is due for release later today. CNBC TV 18's poll suggests that retail inflation is expected at 4.9% against 4.83% in April and versus 4.25% a year ago, while core inflation is likely to hold steady at 3.2% and food CPI could also remain unchanged at 8.7%. Factory output for April is likely to come in at 4.7% versus 4.9% in March against the 5.2% mark that we saw in April 2023. Okay, with that, we'll slip into a break. Up next, when we return, we'll get you all the updates with state governments set to be sworn in Andhra Pradesh and Odisha later today. Welcome back. It's time to talk about an exclusive news now. Sources are telling CNBC TV 18 that the auto industry has written to the government asking for a reduction of GST on CNG and flex fuel two-wheelers. Parikshit is joining us with the details that he's picking up. Parikshit, good morning.
Good morning. Well, we have been seeing how different automakers in the country have been working on flex fuel vehicles, which can run for higher blends of ethanol with petroleum to the extent of 85% ethanol. Then you have CNG vehicles. They're very popular in cars, buses, and three-wheelers. And now the auto industry, several companies are in the process of launching CNG two-wheelers as well. Now, the industry believes that because these vehicles have lower carbon emissions but reduced fuel efficiency, and a lot of investment has gone into developing them, you need a lower GST rate to offset the reduced fuel efficiency and high cost of acquisition. If that does not happen, these low carbon vehicles will not be adopted in a great manner. What the industry is saying that you need to reduce the GST rate, which is currently at a uniform 28% for two-wheelers, to 18% for CNG and flex fuel two-wheelers in the first phase. And once the base rate for all two-wheelers comes to 18%, then you eventually bring down the rate further for low carbon emission two-wheelers such as CNG and flex fuel to 12%. So they're actually talking about an 18% followed by a 12% tax slab. The second request that they are making is that you need to also remove the 3% cess on all two-wheelers above 350cc. What the rationale is also that India has the highest GST rate. If you take the road tax, which is prepaid upfront, the insurance cost, the 3% cess and 28% GST, it's much higher than Thailand, which has a 7% GST rate, Indonesia, which has an 11% GST rate. Overall, they feel that a reduction in tax rate will not only be good for the environment in terms of lower emissions, but also increase sales and penetration of two-wheelers.
Okay, all right. Thank you so much, Parikshit, for joining us with those exclusive details. It'll be interesting to see what is the outcome on this one. They are asking for lower GST on flex fuel two-wheelers and CNG vehicles as well. With that, let's move on and talk about what's happening with state elections and, of course, the swearing in as well. The BJP has chosen Mohan Charan Majhi as the new Chief Minister of Odisha days after securing an absolute majority in the assembly elections. The 52-year-old Majhi, a four-time MLA, will succeed Biju Janata Dal's Naveen Patnaik, who had a 24-year-old run as Odisha's Chief Minister. Odisha will also have two deputy chief ministers, similar to the formula that the BJP followed in Madhya Pradesh, Rajasthan and Chhattisgarh. KV Singhdeo, six-time MLA and member of an erstwhile royal family, will be one of Majhi's deputies. Pravati Parida, a first-time MLA, has also been chosen as deputy CM. She had earlier served as the women wing president of the BJP in Odisha. Let's move on from Odisha to Andhra Pradesh. Chandrababu Naidu is back at the helm after 5 years. He will take oath as the Chief Minister today at 11:30 a.m. Prime Minister Modi is expected to attend the ceremony in Vijayawada. Naidu's ally and the head of Jan Sena, Pawan Kalyan, is likely to serve as the Deputy Chief Minister. Chandrababu Naidu's return as the Chief Minister of Andhra Pradesh will mean that Amravati, the new capital city he proposed to build 10 years ago, will get a new lease of life. CNBC TV 18 Shilpa Ranipeta reports that Naidu's victory has already sent hope soaring. Listen in.
This was supposed to be Andhra Pradesh's dream capital, a thriving metropolis built from scratch to rival some of the best planned cities in the world. But in the last 5 years, the project has stalled, leaving half-constructed buildings, vast stretches of empty land and 25,000 farmers holding broken promises. Now, with the Telugu Desam Party and Chandrababu Naidu returning to power, his pet project is set to be recalled to life.
एक रात काली रात हमें गुजर गई थी, अब चंद्रोदय आएगा शायद, जब क्या बोलते हैं उसको, राजधानी फिर से बनेगी, किसान हम खुशी हो रहे। शपथ ग्रहण तक चंद्रबाबू नायडू ने नहीं लिया है। यहाँ पे जो कांटे, यहाँ पे जो क्या बोलते हैं फॉरेस्ट जैसा बन गया था, उसका क्लियरेंस स्टार्ट हो गया है।
The resurrection of Amravati is Naidu's biggest poll promise, and a new capital city will mean fresh investment.
ఇక్కడ గాని రాజధాని కడితే విజయవాడ గుంటూరు.
If the capital is built here, all towns between Vijayawada and Guntur also come together. My resolve is to build a dream capital. one with world recognition and one Telugu people will be proud of. What is Andhra Pradesh's capital?
ఏది ఆంధ్రప్రదేశ్ రాజధాని
And TDP says he is keeping this promise.
From the past few days, lot of activity had started in Amravati. We will definitely, keep all the projects that have been derailed in Amravati back on track. We always wanted Amravati to be a growth engine for the state.
Amravati was conceived in 2014 with an initial budget of nearly 30,000 crore rupees. The World Bank pledged $300 million and the Asian Infrastructure Investment Bank pledged $200 million. Work began in full swing. An interim high court was built and construction began on the secretariat and residential and commercial infrastructure. Naidu's government also pooled land across 33,000 acres from over 25,000 farmers.
100 cents of land अगर हम गवर्नमेंट को देंगे तो हमें वापस में 25% ऑफ लैंड किसान को देने के लिए एग्रीमेंट था। यही है और जिसमें फूटी कौड़ी भी रिटर्नेबल क्या चाह रहा दूसरे वजह में पैसा किसान को नहीं मिला है। फिर भी हम 25% ये कंडीशन था कि गवर्नमेंट ये 25% को पूरा यहाँ पे डेवलपमेंट करेगी, यहाँ पे इलेक्ट्रिसिटी देगी, यहाँ पे रोड और पूरा बना के इसका वैल्यू बढ़ाएगी।
When Jagan Mohan Reddy's YSRCP came to power in 2019, Amravati project was scrapped and both World Bank and AIIB pulled out. The farmers who participated in Naidu's pet project were the worst hit. With Naidu returning to power, there is hope. In less than a week since Naidu's victory, anecdotal evidence suggests land prices in some pockets in the region have already surged 50 to 100%.
यहाँ पे जब 10,000 रुपये एक यार्ड था, यहाँ पे 8,000 रुपये था, आज 20, 30, 35 को चला गया था।
But Chandrababu Naidu has not yet announced how he plans to proceed with this greenfield project. Experts say that given the state has a fiscal deficit of 4.2% in FY24 and a debt of 13 lakh crore rupees, funding will be a problem and realizing the dream of Amravati may be a long process. In Mumbai, Shilpa Rani Peta.
Okay, that is a very interesting report on Amravati, and of course you can tune into CNBC TV 18 for more updates whenever the swearing in happens as well. We'll slip into a break now. Up next, we'll get you all the cues from the commodities market, so stay tuned for that. Welcome back. We spoke about a whole host of things, markets, the political landscape as well. Let's talk about the commodity markets now. Manisha Gupta is joining us with all the update as always. Hi Manisha, good morning.
Good morning and thank you for that. Well, I'll start with the crude oil prices because we've seen smart gains continue into this one. We're trading above $82 a barrel right now, and this is after the U.S. crude inventories have declined more than what the street was anticipating. Also, the U.S. Fed meeting concludes today, so does the U.S. inflation data, and the markets have seen a bit of a gain ahead of that. OPEC, in the meanwhile, in its monthly report, has maintained strong global demand growth in 2024, and that in turn also seems to be supportive for the crude oil prices. The street believes that as we head into the third quarter from the month of July, you could be looking at a global deficit and a strong demand growth in sense of summer's driving season demand, and all of those factors have taken the prices on the higher side. Stronger gains is what we've also seen overnight in the metal space. So gold is trading above 2,300 off 1 month lows. Same is the case with silver prices, gained a percentage point on the higher side. It is the base metal prices which continue to be under pressure because of the weak home sales in China. So you have copper trading at 1 month lows, iron ore at 2 month lows, aluminum and tin prices also trading at a 1 month low in Asia.
Okay, all right. That is what's happening in the commodity space. Thank you so much, Manisha, for joining us as always. With that, we'll take your leave on this edition of Power Breakfast. But do stay tuned. Bazaar Morning Call comes up next with all the market action.